Howdy folks, Mitch Collins here with eXp Realty. We're going to be running through Fort St. John. It's going to be an October 2021 market update, just to keep you in the loop with some of the things that are driving our marketplace, and then a few preambles in case this is kind of a new venture for you and this is the first time we've explored our area. So again, my name is Mitch Collins. I'm an investor that's basically run the gamut of property and development and things like that in this region for the last 19 years. I've been an agent, and in the last 10 years, I've had the privilege and honor of working with hundreds of investors from coast to coast. And so let's jump right in and see if this is a market that piques your interest. Okay, so Fort St. John, we're up here in the northeast quadrant of British Columbia. Relatively small population. This is from the last census. We're approximately 24,000 people now. But just wanted to give you an idea of kind of where we sit, right adjacent to Alberta here. Edmonton is just down here. Grande Prairie is up here. Fort McMurray is about here. And just wanted to keep in mind as we talk about the size and scale of some of our projects, our population. Very small, and you'll quickly realize why we're Canada's strongest economic corridor. Okay, so predominantly I'm going to talk about oil and gas because that is the really the driving force in the area up here, but it's not the only thing. We are not in one bit a one-horse town. So we're a major agricultural hub. We actually produce about 90% of the province's grain in the area here, so big farming and cattle ranch operations going on. Forestry as well. We've got a major OSB plant, large sawmill, pulp and paper plant. 2016, we were dubbed BC's forestry capital, so really big play there. Mining, we've got copper, coal mining, and various other mining initiatives within a 2-hour radius of our city. But it's just important to know you're getting into an area that's well diversified and is not strictly reliant on just one industry. Okay, guys, without boring you all to death, the reason that we're going through some of these things is you want to determine some of the underlying economic fundamentals that will drive a region to create the opportunity for increased property valuations and strong cash flow, which are going to bolster your investment and make it a good holding opportunity for you in the long run. So the thing that underpins all major real estate valuations is going to be GDP growth. That's gross domestic product growth. That basically is the sum aggregate of all the churn of activity, economic activity going on in the region. When you have a lot of this happening, that's going to lead to job growth, which then, as people move in to fill those positions, gives us population growth. We're seeing that trend tremendously right now in Fort St. John. In fact, we've got the lowest unemployment rate in the country. That's too low to be reported, essentially. We'll look into that in a minute. But why that's important is because our population is growing like crazy. With that comes demand for real estate. So we get increased rental demand. We're seeing that across the board right now. Decreased vacancies, again, tremendous movement in that direction right now. And that's leading us to property purchase demand, which is going to give us increased property valuations and also higher rents, which increases our already strong cash flow. So I just wanted to run through that real quick, and why I talk about the economic fundamentals is because it all drives the GDP growth, which underpins everything else. So the first project we're going to talk about right now is the largest project outside of oil and gas development projects in all of Canada. So this is BC Hydro's Site C Dam. Okay, they said at the time it was going to be about $13 billion. It looks like they're going to be closer to $15 billion. That's billion with a B, to get this project completed. So right now, this project is literally 5 minutes from my office. So when I have clients fly into town, we go take a look at this project all the time. And we're about halfway through construction thereabouts. So at any given time right now, there's approximately 5,000 people on site. And over the next 2 years or so, that's expected to rise to about 8,000 people at peak construction. So we've got thousands more people coming in for this project by itself. And it's just one of the things that's going on. And it's tremendous in size and scope. Now, just as a quick note, we had this project got the green light in the previous administration in our province. Now, when the NDP got elected in British Columbia, they actually put this project under review and potentially threatened to cancel it. I'm certain that was political maneuvering. But anyway, it created some uncertainty, especially on the other side of the country where you can't tell on the news what's real and what's not. But I just wanted to clarify for you, if you have heard that Site C Dam is under no threat of cancellation in any form. Site C is about halfway through construction right now. Billions and billions of dollars have been spent on site. This project is going to go to completion most definitely. Okay, so the next thing I'm going to tell you about, and this is really, really tremendous, we're home to Shell Canada's LNG Canada project, which happens to represent the largest investment of any kind in Canadian history. So we had this project announced October of 2018, and we're just starting to see now a lot of the drilling and infrastructure creation to support this project. So they're actually building the terminal site itself in Kitimat. That's where they're going to be sending the supply of natural gas. But this project right now is going to just completely transform our economy, bring in tens of thousands of super high paid positions, and create demand for real estate across the board. So again, the biggest project that's ever happened in this country's history. And think about this, it's happening at the same time that we have the second largest project in the country, Site C Dam, that we just looked at, overlapping on top of each other. Now, the thing that's really interesting right now is that this year, natural gas pricing has really surged, especially overseas. And there's a number of other companies on top of Shell that are also planning similar size and scope LNG terminals in our province as well. So it's very likely that we'll end up with an additional 1 or 2 or maybe even 3 major companies doing similar projects to Shell. So imagine that. This is the biggest project in the country's history. We could have 1, 2, or maybe even 3 more of those occurring in the next 5, 10, 15 years. So unbelievable opportunity present for us right now. Okay, so just a little bit more about the LNG project itself. When they first announced the project, LNG Canada said they were going to be spending about $40 billion under their cost estimates at the time. However, what they didn't tell us back then was that they were planning to do another, basically to double their output. So this $40 billion price tag include 2 what they call trains, LNG trains. And now that Petronas, or the Malaysian state-owned oil and gas company, has joint ventured with LNG Canada and Shell, they actually intend to double their export capacity, and that's probably going to bring their price tag up to somewhere around $60 billion. So, their total price tag is going to be probably 50% more than what they initially stated, and even what they initially stated made it the largest investment of any kind in our country. So the economic impact across the country is going to be, well, just what you would expect from the largest investment in our country's history. And so again, very, very exciting. There was going to be opportunities and economic, promises and boons right across the country. So big, big project, and we're super fortunate to be sitting right in the middle of it right now. So all this natural gas talk might be something foreign to you if you're not familiar with it, but just really, really quickly. So Fort St. John, we looked at earlier, is right here. We happen to be sitting right in the heart of something called the Montney Shale Basin. So that's kind of this white circle here. Where it's most prolific is right in here on the BC side. And this happens to be the most prolific natural gas play in all of North America and the second most prolific natural gas play on planet Earth. So we're sitting on basically, for all intents and purposes, more natural gas than our country will ever need. And we'll talk for a second about why this particular resource has piqued the interest of so many companies internationally. So, folks, just a second ago, we realized here that the Montney Shale Basin is kind of right in this area. The reason, or one of the major reasons, that Shell and other companies have decided to pinpoint this project as their major, one of the major focuses in their LNG business, is that we're sitting very, very close, relatively speaking, to the coastline. So that means there's much less pipeline facilities needed to get to the coast, where then they're going to liquefy the natural gas. And then the shipping corridor, check this out, is only 10 days. It's 10 days right across here to Asia, across the Pacific into Asia. That's China, Japan, India, and Korea, representing about 65% of the world's population. And their economies are just taking off right now. They're exploding along with the population. And what we're finding here is that there's a transition in this sector of the planet away from dirtier fossil fuels, in particular coal, and a transition into natural gas to provide clean electricity for their economies. So the reason why they're going this direction is every other shipping corridor, other than Australia right now, we're the quickest shipping corridor on Earth, we're easily the quickest shipping corridor in North America. So right now, the only other place that they're sending or exporting LNG from would be the Gulf of Mexico in the southern U.S. over here. So in the example there, it's taking them 24 days to get the same run done. Much cheaper, much more effective to get it done from our area. And one last thing I'll tell you about is that it's much more cost effective to do it up in the northern climates because the ambient temperature is much colder than it is in the southern U.S. And in order to liquefy natural gas, you have to freeze it and then compress the heck out of it. It's a lot cheaper to freeze things when the temperature is, much lower. So there's a whole bunch of synergistic opportunities that are lending itself to, basically why we're seeing Shell moving forward with their LNG Canada project right now. So that gives you a little bit of an understanding. Again, I've got a video that goes into this a whole bunch deeper, but that's in the nuts and bolts of what's going on with our natural gas industry here in Canada right now. Okay, enough about all the natural gas and Site C and all that stuff. So we just actually had the reopening of our massive OSB plant, Peace Valley OSB. We built this plant in 2005. At that time, it was the world's largest OSB plant. I think now it's number 3 or 4. They've built a couple other major mills in that 15-year span. But they curtailed and they shut this mill down about 2.5 years ago because of lumber tariffs and some other things going on in the economy in general. So it reopening right now is massive because it's going to provide hundreds and hundreds of jobs, both on-site and in the field. And, in addition to Site C and LNG, we're having this come on at the same time. So really incredible that we're faced with this coming back to our marketplace on top of everything else. Super exciting news. Okay, so this is no real surprise. In January of 2021, so earlier this year, our city engineered or hired an engineering company to go through a report to basically analyze the expected housing requirements coming into our city. They determined that until 2040 or by 2040, we're going to require over 4,500 new housing units in that time, just to meet demand. Now, I work with the major builders in town who represent about 70% of all new construction in Fort St. John. And I'm here to tell you right now that we would have to see construction go up by a factor of 7 or 8 to come anywhere close. And starting right now to come anywhere close to providing that level of housing. So basically what that means is we've got a housing shortage coming up as demand outstrips supply. We're already seeing that take off in the market. We'll look at that in a minute. But this is a great fundamental to look at because it means that you're buying into an area that has long-term economic fundamentals around demand and growth within the city. So really good thing to look at. We're a city with a future, not a past, and that's important when you're making investment decisions. Okay, so one thing that's really nice to know here is that Fort St. John is sitting on just about the highest household incomes you're going to find anywhere in the country. Now, this was back in 2018. That number has gone up. I've got another report actually I just received yesterday. I didn't have time to put it into this particular video, but I will do that here within the next day or so. And this number has actually increased to about $144,000. So we're looking at the highest household incomes in the country as far as I'm aware. Now, that by itself is very incredible, but here's the other thing I want you guys to realize when you're considering Fort St. John, is that our average housing cost, okay, if you take an aggregate of all the homes available in our city, they're approximately $400,000 for the average, median price point in our city. So that means right now that the average shelter spending is about 15%. So that means it's only 15% of somebody's total income to go towards their housing requirements. Now, if you compare that with places like Vancouver or Toronto, where it's already way past 60, 70, in some cases 80% and beyond, we could see a full doubling here of real estate values, which would bring us to maybe 30%, of the 30% of our total income to go towards housing if our real estate pricing doubled, and it would still be one of the most affordable places in the entire country. So really important to know that we've got super high incomes, very low pricing relative to pretty well everywhere else in the country. A lot of people coming in, and the types of jobs being created here are even higher incomes than this, if you can believe that. And so we've got really good fundamentals around pricing being able to increase while it's still being super affordable. Really good thing to have in our favor. Now, this is probably no surprise, but based on some of those projects that we just looked at that are not speculative, these projects are underway, under construction. Every one of those that we just looked at are, full steam ahead here right now. That leads us to just last month here, basically pulling in Northeast BC to have the lowest unemployment rate in the entire country. Our unemployment rates here in the city right now are not even high enough to report. So that's the the net benefit of being in a region that has the strongest economic output in the country as a result of these major projects. Okay, and we're expecting our unemployment rate to drop to basically zero. Anybody with a heartbeat up here has a very high paying job if they want one. So we're seeing a lot of people coming in from the lower mainland, from out east, where the job market is not nearly as secure or lucrative. And even if they can find good employment, the costs of housing are so high that it's very restrictive. So we're really finding a lot of people moving up here in droves because they can't afford to live anywhere else, on top of the excellent job opportunities here. So I did tell you we weren't talking about natural gas anymore, but I forgot one thing I want to throw in here to you. What's happened here since March of this year is that natural gas pricing has more than tripled. Okay, so we've seen pricing just take off like crazy, and that trend is not expected to slow down. If we look at what the Asia benchmark LNG price is, it went from about, $3 here last year, and look at how that increase has gone up to about $26. Unbelievable. And so what's happening right now is that's going to promote a lot of the oil and gas, a lot of the natural gas producers around the planet to take their LNG exporting, businesses a lot more seriously. So when we see trends like this, that makes it much more likely that and mind you, these trends do come up and down. So, not to say this trend is going to go on forever. That's not how these things work. But the long-term economic fundamentals driving demand for natural gas are expected to only increase. That much it looks pretty certain. And so very likely to see increased drilling demand in this area, which is going to bolster and create more jobs, even on top of the projects that we looked at earlier. So really good news on that front as well. Okay, enough about all these projects and all the other stuff. Let's get into some market statistics. Okay, so this is pulled right from our real estate board here last week. What we're going to look at right now is 10-year average real estate values, so kind of what they've done here over the last decade. What I want to go through here is we did have a downturn in our market around 2016 where we dropped off some values there. We did see that occur in the market. We've strongly recovered from that point going forward. But here's what I want to kind of point out to you. Looking back is useful, but looking forward right now, this is where Site C is going to have an impact, LNG, the OSB plant, higher natural gas pricing, and we're already seeing pricing trending this direction. Based on our incomes and what we have coming economically, I expect this trend is going to just carry on, and we can see it fully double again and still be very affordable. So we're seeing the right trend line here. Keep in mind in my pro formas, folks, that I'm using a 3% annual rate of appreciation. I think we're going to beat the living crap out of that. Time will tell that. I mean, nobody has a crystal ball, but based on the economic fundamentals that are driving our marketplace, I'd say 3% is not even going to come close. Another really good factor to take a look at is the 10-year active listings. So what we're looking at right now is how many listings are on the marketplace. If you're a buyer, how many listings can you go and look at any given time? Now, what's neat to see is that from 2011 all the way essentially up until around 2016, the listings were somewhat flat. Little variations here and there, but they followed the same trend pretty well every year. What we're seeing in the last couple of years is a massive decline in the amount of active listings. We've never seen it as low in the last decade. And actually, I pulled this over the last 20 years, and this is about as low as it's ever been. But what we're seeing right now, and this has actually come down again. We're seeing basically the lowest rates of listings on the marketplace in a very long time. So remember when we looked at that the second slide, when you have people coming into a region and start increasing the demand for properties, that means there's less listings because they're getting sold. That's what's going to push our pricing up, and we're seeing that trend take off here already. So really important to keep these fundamentals in mind. Now, so kind of the inverse of the last slide that we just took a look at, this is the 10-year average of months supply of inventory available on the marketplace. Traditionally we've been somewhere, if we take kind of an average line here, probably around 7 months of inventory is what we've had available. Pretty balanced market somewhere in that ballpark. What we're seeing right now, though, is that we're down to about 3.5. You know, 3.5 is what it looks like to me. And so it's basically, you know, our inventory has halved. You know, we've got basically half of the inventory that we have on average for the last decade. And that's tying back into less listings, more people buying. And that's also another factor to look at. As demand overtakes supply, we're going to see pricing take off. So that's really why we're taking a look at these factors right now. Another really good fundamental to look at, folks, is going to be the sales to active listings ratio. So that's how many sales are happening relative to how many listings are on the marketplace. And again, there's always kind of been a range between 0.1 and 0.15, thereabouts, you know, over the last 10 years. A little bit of variation here and there, but not too much. That's all changed, you know, going back maybe a year ago when things just spiked. Okay, so we're seeing more sales in the marketplace, you know, when we compared it to the amount of listings in the market than we have in history. So right now we're crushing all of those fundamentals. And again, because of our projects that are going on and the amount of people coming up here, not just to work, but just to escape the ridiculously high prices in most other places in the province, this is going to carry on. This is a super good fundamental to look at, again, when determining what's coming in a real estate market. So great stat in our favor there as well. Things are looking really good here right now. Okay, so that's a little bit about the market in general. Now we're going to take a peek at some properties available up here in Northeast BC and just go through really quickly, you know, what you can expect and what's available out there if you're looking to play ball in our marketplace. So what we're looking at here, this is Energy Park. This is a subdivision that we had built here over the last 3 or 4 years. Right now, the entire thing is built out, so we're right across from an elementary school. We've got a church right here, and then the only high school in Fort St. John is right here, so it's 3 or 4 blocks down the street. And then just down here a bit is all the major shopping and commercial amenities. So Energy Park, fantastic spot. I own a bunch of properties on these streets here, this one and a few other guys. But right now we have this lot right here, we just finished building a home on, and then this lot right in here. And other than that, this subdivision is sold out. So that's one of them that we have available. We'll take a look at specifically those properties, but that's all that we have left in this subdivision. And we're just starting another one. Really exciting subdivision right now. Now, this is the Station development. This is the largest master plan community anywhere in northern BC, up in northeastern BC. This drone shot is from last winter. The reason I can't get another one up to update it is that our airport is right over here, and my drone, they've changed the allowances where I can't even get my drone up in the air anymore to get these aerial photos. So this was taken last year. Right now, all of these homes are built out. We're seeing a bunch of homes in here. We've got a few under construction right here, a couple more over here. So it's changed dramatically from what you're seeing here, but this was last year when we first started this project off. And what's important to note in here is that this is the major highway. This is the Alaska Highway coming into Fort St. John. We're the first stop in town. And right now there's an intersection being put into phase 2, which is this, you know, the balance of the land here. And we have a retail and commercial hub happening approximately in this sector here. So we're expecting hotels, you know, restaurants, retail opportunities, things like that. A lot of amenities, which right now are on the other side of town and we don't have nearly enough of. So as this gets developed out, it's going to bolster demand and valuations across the board in this subdivision. So really, really exciting. The builder himself lives on a house that he built on this lot. It's now finished. And me personally, I bought a couple lots right in here, and I'm building a principal residence on that lot right now, which is about halfway through construction. So if you end up purchasing something in this subdivision that we're building, you can call me up in 6 months and ask me to look out my front door and see how your place is doing, because I'll be on site. So anyway, that's the Station. Now, as far as what we bring to the marketplace, I work with the top builders and developers in northeastern BC to custom design and custom build you know, investment-specific properties. So what our specialty is right now is single-family homes with legal basement suites. We do things like separate heating systems, hot water systems, electrical systems. Everything is separately metered. Soundproofing is done. There's additional parking on site. We've built hundreds of these now, worked with investors across the board, and we're going to provide some of the highest cash flow you're going to find anywhere in the country. And on top of that, as our market starts to heat up further than what it is right now, our rents are going to escalate, and we're going to see that cash flow increase. You know, nobody has a crystal ball again, so I don't know for sure. but it sure looks like all the fundamentals are strongly in play right now to push our cash flows even higher than what we're showing today. So that's a little bit, we've got a few other models that we can take a look at in another video, but essentially that's what I do for investors. Is I work with builders and we custom design these types of properties for investors across the country. And last but certainly not least, property management is a big deal. If you're investing from somewhere else in the country, like many of my clients do, I've been working with teams to facilitate that for well over 15 years now. So I've partnered up with a group called Sterling Management Services. They're the largest property management company in all of northern BC. Really good team on site there. For the last number of years now, I've pre-negotiated big discounted fees for Keyspire clients, about 30 to 40% off what you would get off walking in off the street. This is the top management firm in town, and I work with the managers there on a daily basis just to ensure that things are running smoothly and all of our clients have got tenants in their properties. So we've got you looked after on that front as well. Okay, folks, we're just about at the end of our October 2021 market update. So a couple things real quick. Fort St. John in northeastern BC is home to Shell's LNG Canada, largest investment in Canadian history. And actually, I got the stats here. They're expecting it to be somewhere around $70 billion, which is just staggering. In addition to that Site C dam, we are the strongest economic corridor in the country. So anyway, you've got my details here. Mitch Collins with eXp Realty. I am your personal investment realtor. Stop speculating, start investing today. Give me a call, 250-262-9338, and let's see what we can do for you in our market. Thank you very much, and we'll see you next month.